Is the worst over?
There's a lot going on, isn't there? I mean, wow, what a week or what a couple of months that we've seen. Yeah, so we're buying today, actually. You know, we've been putting some capital to work. We've been fortunate holding, a bit of a war chest before this happened. And we're buying into some of those names, the Tencents, the Alibabas, the JD.coms, the Baidus, etc. I think it's fundamentally important to go to the documents which the government has released. So on AST education, the document came out in around April, and it specifically mentioned some key things. One is the social things. So young students between kindergarten and year 9, too much testing, too much schooling, etc. So there is a really important social aspect here that the government's trying to improve on. Also protecting the curriculum and then looking at it in terms of the structure, so the VIE structure. But it's really focused around compulsory education.
Yeah.
Then you move into the gig economy, which has come out, affects your Meituans, your LMAs in Alibaba, etc. Again, there's another social aspect there. They're trying to protect those workers, make sure that there's social security, insurance, welfare, etc. And I look at it, I actually think it's a good thing, because I want to be able to sleep at night and look at these companies that we're investing in with confidence that, the corporates that we own are actually doing the right things for society. Now, it's also been a little bit too much too soon. So you had the Cyberspace Administration of China crack down on national security and data protection, and State Administration of Market Reform come in on the Anti-Monopoly Trust and gave Alibaba a fine, etc. And from an outsider looking in, it really looks like a black box. What's going on? And will the crackdown in compulsory education in terms of the VIE structures that are in place there, which have hurt TAL and EDU, will they go across into other sectors and industries? That's the key question to be asking.
Yeah. On that point, just to pick up, just to unpack some of the things there, the after-school education, the tutorial part, kids, after school go home, play, do other things, right? Do you have enough information, or do we have enough information, public information, for you to take advantage of that? Because I can understand Tencent, Meituan. You can make a case that maybe things haven't really changed substantially, but for that particular sector, when they say you can't raise foreign capital, you can't make profits on a certain part of your business, how much do you think the price dislocation has already priced enough for you to take advantage of at least the uncertainty?
So it's a really on-point question, Dave, because the government actually released back 3 or 4 years ago a draft documentation in regard to the private education promotion law. Then on the April 7th, the document came out, Order 741, which has about 68 articles in it and talks about all the things that you're already referring to. So we're a long only. I'm really surprised that a lot of hedge funds didn't pick up on some of those key things which were specifically written through those articles. And you've had months to review that. But if you go through it, the intent of that document, I think, is really clear. They talk about that compulsory education between kindergarten and 9. They refer only briefly, I think it's around Article 25 in regards to higher education. But look what's happened to the higher education stocks in the Hong Kong and the ADRs as well. They've all been sold off quite aggressively. I think it's really one of those things where it's tough work to go through these documents. You've got to read it meticulously and understand what is the true intent of the government. And I think what you've seen overnight come through, and today with the government, putting a front page ad on newspapers, etc. Our intent is not to destroy big tech. And if that's the case, great buying opportunity. If it's the case that these VIE structures are under review and it's then going to go on to all these other TMT sectors, then we're in trouble.
I just want to kind of cross over to some of these lines that we're seeing. It's Cathie Wood once again, ARK Funds. I think it's almost daily that we continue to see her offloading some of these tech shares. Today it's Tencent, JD.com, Pinduoduo are part of her list here today. She's not really buying these moves that we're seeing from regulators and meeting with banks. What do you say to those institutional buyers out there and the foreign capital that people are just so alarmed right now that potentially this is just the start of these outflows that we're seeing and may not potentially come back?
So capital will only go where there's confidence. And I think the Chinese government haven't done a great job installing that confidence, because you've seen what's happened with also the Stock Connect volumes, massive amounts. You've seen even the domestic A shares, domestic funds in China selling as well. So people are caught right now in this dark cloud and really trying to interpret and what's happening. I look at it and go, come back to the valuations. So we sold Tencent, 420, 430 when it hit those highs. As you just pointed out before, David, stock's down more than 50%. And I agree with you. I don't think its fundamentals in terms of its business model has changed by half. JD.com, another one. And they have also, in the meantime, raised capital via doing its logistics IPO, etc. These are good companies. I suspect they will comply with the rules and the laws. That's really important, because if you don't, you see what happened with Didi in terms of the ADR listing there. You have to comply. You have to make sure that you follow the regulation. And if they do, this is going to be a wonderful buying opportunity to take that long-term view. And we're fortunate. We have some very, very, very patient long-term capital, and we're putting that capital to work.
At the very least, rates will remain where they are for 2 years. That's the Fed. That doesn't even count everyone else that's waiting behind the Fed. That's great for you guys, equity guys.
Keep putting the liquidity in, keep it as it is, and I think we don't have any problems. I think his comments were pretty clear. They're not going to be doing any tapering, and they're going to keep with the mortgage-backed security purchases, keep putting the liquidity into the market, and keep interest rates where they are at the moment. So I don't think that's a surprise. Market overnight, obviously, was in the US was pleased with that. So it's kind of like the same. It's just when maybe that 2-year figures, but when will it stop? And that's where I think the market will look at the yield curves and try to predict that.
How closely are you watching what's going on in the bond markets right now? I mean, real yields are in negative territory. You have bond yields and long end heading lower. I mean, it seems like it looks a little bit more than just a technical move, that potentially there is a growth concern here, and that potentially the credibility of the Fed is on the line as well.
It's hard. I mean, I'm not sure about the credibility of the Fed being on the line. I just think it's very difficult because you've got this COVID situation and the labour market is very, very tough. And then you've seen, obviously, inflation fears come in, and I reckon a bond portfolio manager's got a really, really tough job at the moment because of the fact that predicting that yield curve or the shape of it's really, really difficult. I'm looking at it. I'm not making investment decisions based on it, as we're an equity long manager. But if it does go up too much, or if the liquidity comes out the market, it's a big risk to where some of the valuations in the developed world is at the moment in terms of the equity markets.
This is going to be an abrupt pivot. Speaking of shape, your biggest overweight, your fund is Korea. Within that market, Botox, a Botox company.
Yeah.
Talk us through. I mean, the thinking is quite clear.
But we didn't get too into this play.
I reckon after this week, I might need a top up and buy Botox with all the stress that's happening. No, I'm showing my age.
You're fine, Sam. But yes, go ahead.
But you can't even travel to Korea at the moment anyway, right? No, there's a company there called Jul. It's a great little business. So they're expanding through a Chinese distributor into the big Chinese vanity market of Botox. And, I think we've got lucky for the time being. They're primarily majority owned by private equity. And it looks like private equity wants to sell out. So there's a number of people looking through to maybe take the company out, which would give it more share price appreciation. So we think it's a undervalued business. The margins and the price at which they can charge overseas. So that's really interesting. So they'll report, I think, last time I spoke to them, I think second week of August. And I think OP margins will look good, the profit will look great. But in the long term that they have, with then hopefully positive regulation to come through in Europe, and then they'll hit the US market, it could be a fully fledged global company in terms of Botox. So interesting one.